Hey, Jamie, Steve, Happy New Year.
Scott, thanks a bunch. Steve, que pasa, my friend?
New year, getting back in the swing of things after kind of a quiet week last week, at least with the holidays and such.
Oh yeah. Everybody's back in the saddle, so to speak, and welcome everybody to the first office hours of 2019. And of course, tomorrow is Elvis's birthday, just so you know. Now, getting back into the saddle here, we've got some really interesting stuff to show you guys today. But before we get into that, I do want to take a little moment here to make the legal guys rest easy, and just want to make sure everyone in attendance is aware of the fact that we share all of this information, whether it's this webinar or any of the other ones that we host throughout the week. Everything is presented in educational format only. So if you do need advice on investing, trading, when to do it, all that good stuff, please seek out a registered investment advisor or a licensed stockbroker that can legally dispense that type of information to you. But we here are for educational purposes only. All right, and we probably have quite a handful of new people in here, being the new year. So we always like to take just a moment here at the top of the webinar hour to let the newcomers know about the community that we've built around the award-winning technology. And it all pretty much starts right up here with Barry's trading room. If you've shopped around trading rooms, you know that most of them are not free, and quality of content is another big thing out there. Well, we've got plenty of quality content manifested in a form or a person called Barry Anderson, who opens that room up 30 minutes before the open every day and does a fantastic job at showcasing the way he uses TI technology and his trading style. Come one, come all to that room, the best price out there, $0 and 00 cents. So if you haven't been taking advantage of that resource, by all means, get in there. Hundreds of traders every day in there, learning, passing along good information. Great place to be, especially if you're a newbie. Of course, today you get myself and Steve with office hours. Steve takes the steering wheel tomorrow for the trade of the week on Tuesdays. Andy Lindloff rides shotgun with him, and I don't know if Andy's back yet or not, Steve. Or
Back Wednesday.
Back Wednesday. All right. Well, let me know if you need some help in there tomorrow. Q&A for Wednesdays. What we do is we kind of change it up a little bit, bring in Dan and Brad. Dan is the CEO and founder of Trade Ideas. Brad Williams is our Chief Technical Officer, making sure all the things work behind the scenes. Now, Andy's going to round out these 5 p.m. Eastern webinars on Thursday with his trading studio, and I ride shotgun with him. So 4 of the 5 p.m. Eastern webinars. Friday, we change things up, do it a little differently. It's more of a just come one, come all with anything TI related, starting off at 11 a.m. Eastern. And, we've been having pretty packed rooms of people, so as long as we have the crowd there, we'll take it take it to a full 3 hours and wind that thing down at 2 p.m. Eastern. So Friday support session, put it on your calendar. Be there or be square. Now, in addition to those guys, we used to do the one-on-one training sessions, but because our client base is getting so enormous here and we have limited resources in the form of myself and Steve and Andy and Sean, we've reverted to TI University, which is pretty much the same type of content, but just designed for bigger crowds. So Beginner 101 is on Monday, 201 Tuesdays, 301 Wednesdays, and 401 Thursdays. We do recommend that you take these classes in order because the knowledge that you gain in 101 will be needed to build on 201, so forth and so on. So this is a fantastic place to go, especially when you're brand new. Learn everything from the ground up as far as functionality within TI Pro and all of its modules. So if you haven't signed up for these guys yet, do it. We also have recorded versions of these on our YouTube channel. In case you just want to skip right to the recorded versions, you can do that as well. Of course, we've updated this chart, and once again, to illustrate how the user base and the expanding user base is responding to AI. So the very first AI was brought online very beginning of 2016. So we've had full 2016, 17, 18. This will commence the 4th year of AI being introduced into trade ideas. And of course, 2019 will probably be a little bit bigger than the bar that you see here if everything remains the same. We actually think it's probably going to increase a little bit. So it's going to be an interesting 2019 on many fronts, and we're all glad that you're here with us. Now, let's get on to today's itinerary. Of course, I'm going to pass it off to Steve here in just a moment, let him talk about the ins and outs of the overall market. Definitely interesting spot that we're in, especially coming out of the Christmas break. Very not normal, we should say, for a holiday market. And I guess, Steve, if you're ready right now, I'll go ahead and kick it over. No point in rehashing what I'm about to hash out here in just a second.
Sure. Why not?
All right. 1 second here. There you go.
All righty. Oh, I got to put my cursor on. There we go, which means, of course, I'm drawing over here. So that's my attempt at a bear. What we're looking at, guys, here is the S&P 500 on the SPDR ETF. And some things of note, I mean, we have not really spoke since about probably about this area back here, so a lot has certainly developed since then. Some items of note that pop out to me is, first and foremost, are we in a bear market, or was that just a correction that we had? Technically, 20%, I think it came in just, it was either that day or this day where the headline started to read, we are officially in an S&P 500 bear market, meaning 20% off of the recent highs. And that's my attempt at a bear right there. But going forward, we had, as Sean talked about a lot, and we talk a lot about on social media and all these webinars, some of the most vicious rallies, the vicious bounces can come in corrective and downward markets. And so that's what we had on Friday. We had, back here, not Friday, big bounce off the lows. And most importantly, I'm going to try and give some good credit here. Notice what's happening. We could have easily taken this day right here, this red candle day, and used that as the, and that's kind of what I originally thought was going to happen, to be quite honest, could be the initial barrier or the pocket that we bounce into and then roll over lower. That didn't happen. We held our own, market held its own, sideways action for 4 days, and then a nice lift on Friday with some great jobs numbers and some economic data that helped really push the catalyst of the price action higher. This is not exactly a bearish, setup here. This is constructive, I'm going to call it. I mean, I without trying to get too historic, Jamie, I remember a period when I first started trading actively back in '98. We had a big old correction like this, and I took note of the correction and how it bounced and kind of dug in like a little chair and then started to move higher. And we did move higher out of that correction back in 1998. It's possible we could see something like, yeah, go ahead.
Did that coincide with the Asian contagion?
I think so. I just remember seeing like, wow, that was incredible. And I took mental note of how we kind of pulled back in like a little chair fashion and then moved higher. Not saying that's going to happen. I'm not here to predict anything. I'm just trying to look at the tea leaves and see what, most optimum scenarios might be. So in the bullish case, what I'm liking is this curling moving average here. Okay, the price is holding on to that moving average. Matter of fact, today it took off from that moving average. Friday it took off from the moving average, and we got today, I'll get to that in a second, the day and a half theory. That is my theory and Andy's theory, the old day and a half move. But nice movement on Friday, and then I thought we were going to run right into this 20-period moving average, which is our secondary backstop now. And the worst case possible today would have been for the bulls to push up at highs and then reverse all the way back to lows. It would have left nothing but a single little wick naked there with no color on it at the 20. Well, we didn't get that. There's still some good color in this candle. So if we can continue to build on these, sideways is good. Sideways is good. But what I see as the real pivot point, obviously, is this orange line here. This orange line pretty much coincides with some significant lows before we broke down. And not only that, we can take a look at the breakdown of volume to the big side, and then our bounce has been a little bit more suspect in terms of volume, but volume is second seat to price action. So we always look at price action first. So the bull case is that if this moving average can continue to curl and turn around and kind of move back up, that's good. You know, there's a possibility, and where I'm going with this is that maybe this was just a simple correction. This wasn't the big bear market. I don't like to get into details of fundamental and data points and the economy, but there's nothing really bad out there. I mean, one of the reasons we rallied on Friday was because the Fed said, okay, well, we might be a little bit more cautious in raising rates in this environment, and that really helped on top of the jobs numbers that helped move the price action higher. But we are students of price action, not what is being told to us in terms of data points looking in the rearview mirror. So what I'm seeing is a big inflection point up at these levels. The 260 level looks pretty rock solid based on these two prior support levels will become future resistance points. So I see that as probably the biggest hurdle of all. These moving averages can be a guide. What the 10-period moving average really only tells us is if momentum is still in play. And if had the price gone down after hitting that first momentum line, then momentum would have still been to the downside. So they broke the momentum curse by digging in and going sideways. And then we took on the 20-period today. Getting back to that thought that I had a minute ago, when stocks get their move, when they have their big move breakouts, typically, I've seen it, and Andy corresponds with this, we used to talk about this all the time, we get a day-and-a-half move. And so here is our kind of day-and-a-half move. This is back to Friday. So we had a really nice move on Friday, closing near highs. And then we had the follow-through from that move, and then we get to the midpoint of the day. We get kind of a day-and-a-half. This, to me, is usually when the short money, the day traders, start to bail out of a winning position. Your short-term traders don't really seem to have an appetite to stick around for a good trade longer than a day and a half. And so I wasn't really surprised to see a little bit of a choppiness and pullback here at the late day. But on the bull side, on the good side, we could have come back down and closed near lows, and it would have been a lot uglier on the daily chart, but we didn't get that. So I think the term that I put up there on Jamie's slide was crossroads. We are at a crossroads. I mean, back here, we kind of had a pretty good idea. Momentum was to the downside, but now we don't really know where the next move is. So we've got to kind of watch and observe the price action. I'll tell you what, if the price action can get back above and close above that pivot line for a few days and hold it for a few days, I'm willing to say that was not a bear correction. That's my bear. That's my no bear. Bear market, excuse me. That was nothing more than a deep correction, which, by the way, this market needed so badly. So I would be the #1 fan to get back to a constructive market that's going to follow the economy and the data points that we're getting, and then we can all look back and say, yeah, that was a pretty good correction, and that's exactly what price action needs. Price action needs a bath. It needs a shower. It needs to breathe. All right. Where from here in the individual sectors? Well, oil's had a couple of pretty good bouncing days. Biotech's had some pretty good bounces. I'm just looking at my sector list here. Retail, these are the ones that seem to have come most out of the basement the other day, that we had set the other day. Also, GE was kind of interesting. I felt that in the new year, all the tax loss selling would be gone. GE is finally coming back to life. It's decent to see, at least in the bigger picture for the conglomerates. And then I'll talk more tomorrow about the trade of the week. But we can't just sit here and play defensive all the time. So we picked a trade of the week, and I kind of like the way the entry was talked about. The entry said, try and get the stock as close as you can to 20, but don't chase it unless you want to. Well, there's a great example today of if you just jump in and buy the open, if you're a little bit patient, sometimes you can get some better prices. And so, again, we'll talk a lot more about that in tomorrow's webinar when that is the topic. But quickly over to the other ones, NASDAQ. Interesting, there's some what I would call relative strength here in the NASDAQ. And what do I mean by that? Well, the respective lows that we had in the S&P, I drew this orange line across, low and low. Well, that same respective low in the Qs shows our current price action is now at that respective pivot line. So here we are. The Qs are kind of leading the way, and you can see it's not a surprise. We did close well above the 20 today. Pretty good color in that candle, not a lot of give back. So the big question for the NASDAQ is, can the NASDAQ post a couple of closes above that pivot line? And if they can, then I'm going to start to get more inclined to take off the bear hat, and maybe this is a market that wants to get constructive again. But it's too early to tell at these points right now. We're going to need a few more days of data. And the IWM, its respective pivot line that we were looking at on the others is basically up there, just for reference. And then the Dow, its respective pivot line, I would say, is probably something more akin to that right there. So the NASDAQ is leading us higher, even though we have gone lower on technology. They did lead us lower for sure. We might be getting a nice bounce with technology leading the way. But watch those pivot lines. That's kind of where I was going to end it. That's what I got for you, Andy.
Well, thanks, Steve.
You're welcome.
Is my name Andy now?
Did I say Andy? I'm so used
Is
to
my name changed to Andy? You can
We've
call
done
me
a lot of-
Ray.
we've done a
you
lot
can
of
call me
seminars.
Jay. I know.
I know.
I'm just messing with you.
Monday. What are you gonna
Andy,
do?
No. They both end with an E.
You're both in Texas.
Yeah, we're both in Texas. We're both from Texas. I can see how you get us confused. No.
Sorry about that.
All right. All good. All good. Let me grab it back here. All right. Just let me know when you have eyes back on. We shall proceed.
Yep.
Good to go? Okay. Thank you very much, Steve. Thank you very much. Interesting times. All right, ladies and gentlemen. So you're going to hear me talk about a lot of the same things that you heard me talk about in 2018 because some things just really don't change that much. Risk on, risk off with Holly, man. It wasn't real hard to find some risk on opportunity today in Holly. And we're going to go over those and look at all the blotters of the 3 different modules and talk about that and how to kind of, examine it on a trade-by-trade basis. Then we're going to talk about the testing that's going on with Brokerage Plus and, more importantly, the thing that everybody's excited about, automating Holly. All right. So I've got a couple of screenshots to show you from Dan Merkin, the CEO and founder, letting Holly hunt just basically with no throttle today to the long side, as you can guess. Things worked out pretty good. But before we get into that stuff, want to kind of just backtrack here and talk about some very important things on a session-by-session basis. Expectations, right? Well, Steve just pointed out where we are in chart land, right? At a crossroads. Well, sometimes crossroads, you're like, yeah, which fork in the road do I take? Do I go left or right? It's hard to establish which is the best direction. That's why I have some tools that I like. Number one, the CC readings, compare count readings coming from one of my compare count windows. That's my favorite, looking at the large cap stocks. When I say large cap, I'm talking about stocks that have a market cap in excess of $4 billion or higher, right? And so what did I have in my large cap compare count window today after the first 15 minutes? And that's exactly what you see right here. After the first 15 minutes of the market, and I tell you what, yep, we got the SPY chart up already. I got 15-minute candles up here already, and you can see the arrow pointing right to that first 15-minute candle. Now, after the first 15 minutes, what was my window telling me here? And that is 55% green bias, meaning there were 55% of all the stocks coming through this ticker today were hitting highs with accelerated volume, as opposed to only 45% hitting lows with accelerated volume. Now, just a quick blurb about this window in case maybe somebody might be hearing this for the first time. When I look at these readings after the first 15 minutes, this is right about where things start to get interesting. When you see a bias of 55% one way or the other, that's when, I start to pay a little bit more attention, as opposed to if it comes in at 54, 53, a lot of these days, and I expect maybe tomorrow or some of these days coming up, we're probably going to see some 51-49 counts. Now, whether it's to the upside or the downside, unknown at this point. But typically, from experience, when we see the 49s and 51s, that just means that, going to be some long opportunity, going to be some short opportunity, maybe a lot of whipsaw. But once we get closer to that 55% mark, things have a better chance of trending. Now, trending for how long? Don't know. Today was a pretty good example of just getting barely into the, what I like to call the green territory, 55 and higher. Of course, when we get into 56, 57, 58, 59, and 60, or sometimes even above 60, pay even more attention. And of course, just like any study or metric, do these work all the time in calling market direction? No, but man, a lot of times more than not, it's giving me some good information. So having said that, we had a nice 55% green bias. First candle right here. These are 15-minute candles. So what do? We don't just jump in headlong after we see these, what could be, you know, the roadmap or expectations, right? We threw some grass up into the wind. It took off. We're facing north. The grass flew in front of us. Hey, we got a good breeze blowing north. But hey, let's see what happens with the market. So what do we have after that first 15 minutes? We got 1, 2, 3. After about another hour or so, we get up into here. Tried to punch out here, didn't quite make it. But you know what I was really paying attention to this morning is this wick action. Down below the 10-period SMA, right back above. Down below the 10-period SMA, back above. One more time here before finally getting a close up here and a break of that previous high. These were all good signs to pay attention to this morning. Don't know which way it's going to go, but from the looks of this compare count reading, we could be going up today. Start to see wicks that can't close below the 10-period SMA, another good sign, right? Now, on top of that, Holly starts to make trades. I've got all of the blotters up here, Holly Grail. We got 2.0 here. We've got NEO down here. And I've got these sorted by time. So it wasn't until about an hour into the open that the Holly 1.0 got active. We had 2.0 active at 15 minutes in, and NEO starting to bang out trades at 18 minutes into the open. Now, what are we noticing here? In addition to my favorable green side compare count readings, we got this favorable action here on the SPY as the first hour concludes, staying above that 10-period SMA. And then we see the AI creating what we would call a long bias, right? So now we've got three things speaking into our ear about which way the market might go. And we all know exactly what happened after that, right? We had the break up, we had the SPY push to higher highs. Of course, before this breakout occurred, you're probably thinking the exact same thing that I was thinking. Oh man, we don't have a whole lot of room, but if it goes, it goes, and we'll see what happens, right? And of course, we topped out here before buckling back over. Notice how it just surfed that 10-period SMA the whole time until we started getting weak, closed below here. I mean, I'm going to show some charts today, and it's like this looks like a lot of other things out there. Dan and I always joke around about the algorithm that runs the market, or the 2 or 3 algorithms, because the charts all look the same, and today is no exception. So we got the high compare count readings to the upside. We got bullish activity going on until the break on the SPY. Then we've got our AI cluster establishing clearly a long bias in its opening flurry of trades. You know, NEO threw a couple of shorts in there, but after that it was all long, 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 and strong, all right, by a long shot. Now, equity curves on these guys, it's not like everybody just took off to the races here. Right here we're looking at NEO, and talk about a beautiful equity curve. That's about as pretty as they get, with just a little bitty drawdown in the very beginning, as NEO started opening positions, that little bitty drawdown, but then after that it was just off to the races. Let's take a look at 2.0. 2.0 finished in risk off mode today, down a little bit of change, right? Risk on, if everything was being held, would have been down about $1.20, 48 cents on Holly 2.0. So obviously it was NEO that won the day today and did it in grand fashion. Holly 1.0 drawdown area looks about normal, and a spike all the way up to over $2. But if you didn't take the cookies, boom, all the way back down to below water, and then back up, one more little push before the day was out. So a lot more erratic on Holy Grail today, but the more aggressive of the trio, which is Neo, definitely did well today. And by the way, closing at 4.26 points, but reaching a high of almost 6 points at the peak. So let's talk about risk on and risk off. First, let me just kind of define what those are in case there might be some newcomers that are like, well, what is risk on and risk off? Well, risk off, and we can see every time one of the AIs exits a trade over here under the exit reason. Well, risk off is Holly simply obeying her rule set like me, you, or any other same trader would do on any given day. We've got a stop loss. So if the stop loss gets hit, trade is closed. Oh well, right? But Holly can also exit on a profit target if the profit target gets hit, or a reduced risk, or a profit save. If something's not moving along quickly enough, she always has the audible to get out of a loser early in the form of reduced risk, or close out a winner early in the form of profit save. So risk off is simply Holly obeying her rule set, whereas risk on is staying in the trade even though we see Holly getting out in hopes of making more. And typically this is going to be predicated, excuse me, our decision to stay in risk on based on what we see going on the chart and what we think might happen. So it's us overriding Holly's risk parameters and saying, you know what, Holly, I see you're getting out, but I think there's a little bit more meat left on the bone, so I'm going to try to stay in here and make more. And this is best addressed on a single trade by trade size up, if you just ask my humble opinion here. So what I did just now is I sorted Neo's blotter by risk on, so we can see how much these trades were up as of the close today. So the one that sticks out like a sore thumb right off the bat, CNI. I mean, you're going to be hard pushed to find a better long chart today than Canadian National Railway, which we get the entry signal right here at 75.53 with Holly. And then pretty much just a slow grind up from the get-go. Never really was an immense amount of pain to be set here. Why did Holly get out of the trade? Well, notice how we have a nice smooth grind up here. Now, in Holly's eyes, it's not really moving along as rapidly as she would like, and that's when typically you're going to see her get out on a profit save. Sometimes they'll go sideways, and the longer that she sits in a trade and it's not making headway, then the more likely she is to call that audible profit save, or in the reverse fashion would be a reduced risk. So bottom line is this little square box that's colored in, this is when Holly got out of the trade and booked her 25-cent winner. Now, when we're in this trade with Holly and we see just a nice grind up and we're thinking to ourselves, maybe, and this is a good habit to get into, we're focusing on time until exit, and on a timed hold, maybe we're noticing that this looks really good. It hasn't really thrown any curveballs at us. We might want to look at the daily and go, okay, well, at that point in time, it was down here. Maybe, maybe it's going to complete this little U-shape right here, and maybe that would be a good time to get out. So we can do several things. We can consult the daily. We can, see how it's doing against this 10-period SMA, which, by the way, look at what the SPY did all day. Well above that 10-period SMA. Look at CNI. Look how that thing acted as the guiding hand all up until this point, and took a little bit of a pullback, stayed below, but this can be used as a very simple moving average to, in essence, help you figure out when you might be getting out of something that's working, right? So a big difference between $1.92 here and 25 cents. A lot of spread between risk off and a risk on here. So it wouldn't have been that big of a stretch to go, okay, Holly, I see you're getting out. I tell you what, I'm going to stay in it. I'm going to adjust my stop to the prior 15-minute low, or whatever you think is appropriate for your trading style, in which case never would have even come close to getting stopped out. Just a nice smooth transition to the high of the day before we took that little pullback. So assessing these trades as Holly is getting out of them, whether it's a profit save or maybe a timed hold about to expire, and just sizing it up and going, based on what I see here, do I feel comfortable staying in the trade? Now, this little guy right here, CRBP, well, we will talk about TMUS because a beautiful entry nonetheless and not a whole lot of pain. This one a little bit different because the target was actually hit of $1. Looks like that was a pretty good target hit because saved you 11 cents from the time of the close. Now this one, big difference. CRBP, 18 cents. Why did she get out? Now this one was a timed exit. So if we're paying attention to this column over here and we see, hey, it says 1 minute until Holly's exit on this CRBP. So we're watching it. We're noticing, hey, this one looks a lot like some of the other longs. And by the way, I got these very powerful compare count readings, the SPY staying above the 10-period SMA. And I'm noticing that this one, of course, in hindsight, it rode it all day. But if we're seeing Holly get out right here, we could have easily made the decision, okay, I tell you what, Holly, I'm going to set my stop loss to break even. We're going to try and milk this one for a little bit more, and you would have been paid quite handsomely on this one. Once again, about a 52-cent spread there between risk off and risk on. And just like top ticking a trade on the long side or bottom ticking a short, are we ever going to get the full amount? Well, yeah, if you held till the close, you are. But when the day is in gear, we can have expectations, but there's never any certainty as to how things will close. We could have just as easily cycled back down today. We did a little bit, but not as much. As Steve was talking about earlier, the bleeding was stemmed and didn't retrace all the gains. So 52 cents on the table there, and that's where things start to dissipate. Once we get a little bit lower here, 14 versus 39, name of the game is pretty much the same thing. Chart not near as pretty, but once again, once we tested that 10-period SMA is when things got a little bit weaker. But if we just cruise through here and look at all these bigger winners from Holly Neo today, what you're going to notice is that 10-period SMA was in play all day on most of these things, just like it was on the overall market. Some a little prettier than others, but definitely noticing the same thing in a lot of these plays today. Now let's go on up here to Holly 1.0, what we call Holly Grail. Little risk-on activity here in GHL. We got an entry right here at 24.66. This one, not off to the races. This is something that we see from time to time. We get up a little bit. We come back down, we test that entry line, sit there for 15, 30 minutes, and then go back above it again. So on these, what you're going to notice from watching Holly day in, day out is there's going to be a flurry of trades after the first 20, 30 minutes, an hour. You're going to see some winners, but a nice place to focus once you get your, initial rush over with, which is different for every trader. That first hour and a half, we're all pretty busy checking stops, making entries, so forth and so on. Then you hit a little break point where you're like, okay, I think I'm good now. I can take some breaths, see what else is out there. So when you see some Holly positions that are just kind of flopping around, break even, those are always worth taking a look at, assuming the trade is still open, because not all of them are going to behave like these guys. I mean, this is always great. Hey, immediate gratification. We all like that. But sometimes they take their time and they'll hug that entry line for an hour. Some of them do it for the majority of the day and then bust up. Some of them do it for a shorter amount of time. But it's always a good idea to look at all the open trades that are just kind of floundering around at break even or, up or down a few pennies, because sometimes they do this. And keeping in mind that it never really made a run down to the stop area, and we can see, hey, it's hugging the 10 period, not as pretty as the other ones, but it's still in play here. So in essence, we could have gotten the same price as Holly did an hour later, or maybe even a few pennies better, depending on, let's see, 24.66, maybe a few pennies, but not by much. But sometimes they go immediately, sometimes they don't. The ones that don't, that go sideways, just give us a little bit more time to participate. So keep that in mind as you move forward. SCVL, hey, little consolidation area up top here. Can't quite, I don't know if you call that kind of a bull flaggy type pattern, but the same old song and dance. Holly makes the entry right here. We get a little move higher, takes its time, had plenty of time to react to this one as well. Profit save. Holly gets a little impatient because we're getting that sideways action. Look, these are the only two, 15-minute candles that encompass the shaded area here. So she got a little impatient. But as you can see here, boom, 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 move higher. So, a difference of, what do we got there, 38 cents. And just keep in mind, as we're looking at these risk-off, risk-on spreads, you'll see a dime here, a nickel there, 20 cents here, 20 cents there. Over the grand scheme of things, these pennies make huge differences. 10 cents here, 5 cents here. On a per share traded basis, it can really add up and can literally mean the difference between, hey, at the end of the day, week, month, was I up net or was I down net? And big difference in a penny here and a penny there. Just tally up your commissions and start running the numbers and go, okay, if I'm paying $4 in, $4 out, and I went over to a place like, say, Interactive Brokers, where I'm paying a per share basis, big difference there. This is the same thing.
I'm sorry, I was just looking at Joey's question. Were you talking about something in the shaded area of a chart?
Yeah, let me look here.
You might want to revisit that.
Panel.
Yeah, Joey had a comment.
It wasn't updating, yeah. Okay.
What shaded area?
Okay, we're talking about Holly got impatient on SCVL here. Okay, so I'm pretty sure this is it, Joey. So Holly makes the entry right here. Now the shaded area is how long she held the trade, right? So we can see here that she got out for what she's calling a profit save, but we can see she actually lost a nickel there. So it was probably, flat at the time. That's why that's not showing reduced risk. Sometimes when it's a plus or minus 5 cents, you'll see reduced risk when you thought it should say profit save and vice versa. But the bottom line is this. When Holly gets into a position and it's moving sideways, then that's when these audibles come into play. And when I say audibles, reduce risk and profit save are the audibles. Profit target, stop loss, and timed hold are her hard and fast rules, right? But reduce risk and profit save, I like to refer to them as audibles because the longer she sits in a trade and it's not going in the direction that she wants, or in this case, long, it's going sideways, not going up, that's when she can get out of a winner or a loser early. And that's what she did in this case, and she took actually a nickel loser in this, whereas we could have sized this up and went, okay, Holly got out for a nickel loser in risk off mode. And I used the impatient comment. Well, we all know Holly doesn't get impatient, right? It's just that this is what it looks like to us. The longer she stays in a trade and it's not going the direction, the more likely it is for her to call audible in the form of reduced risk or profit save. So let me know if that helps clarify the situation there. Okay, Joey, cool. All right, and sorry, my questions panel was sorted the wrong way on the incoming times.
No worry, we're caught up.
Did I miss anybody else?
No, we're good.
Okay, perfect. Let me just make sure I'm looking at the most recent questions going that way. There we go. Okay. All right, so risk off and risk on, that's the general idea there. Now, as far as risk off, risk on Holly 2.0 today, there's just not a whole lot to talk about here. 2.0 was just the laggard of the three modules. for today. And there you have it. Looks like the smaller stocks today, most of these longs were produced by Mighty Mouse today, which is looking at the smaller cap stocks. Sometimes those guys are in vogue. Just appeared today that the smaller cap stocks or the smaller price stocks were not where the party was at today. And that also makes sense because the CC counts were for the larger cap stocks. We got to follow through on the market, and it seemed to be the higher cap things pulling things up today. Now, risk off, risk on. Let me just check the time here because should have just enough time to get through everything. Now let's talk about Holly and what's coming. Okay, as all of you know, we are working feverishly, or I should say the guys in the coding department are working 24/7 to deliver the module that we've been working on for a very long time now, which is the ability, giving our users the ability to automate Holly. Now, of course, we're saying the end of January, but if we get it done by the middle of February, I'll be ecstatic, and that's kind of where the consensus sits right now. So end of January, first couple of weeks of February, before we make the ability to auto trade Holly available to the users. So there's been a lot of questions in the past about, well, how are you going to know what strategies to run and when to do it? Well, as Steve likes to say all the time, trading is subjective, right? We've got a high-powered statistical model here, but does that mean we can just turn it on every day, go do our thing, and come back and count our money? Well, no, not necessarily, because there's a lot of ins and outs when it comes to executing in a live market. Now, some of the things that I've rehashed can help us better make decisions about how we will treat our automation in the future. Hey, market's holding up. Hey, I got very powerful compare count readings after the first 15 minutes. Hey, Holly's going all along. These are all things that we can string together to give us confidence that our ideas might have a decent chance of coming to fruition. And today was one of those days. Textbook, right? Because we had the CC count readings. We had the market holding up. We had the market breaking out after a not so long period of time. These are all very bullish things, right? 3 of them, more importantly. And then when we see the AI going, establishing a long bias, well, then what you're seeing right here, let me just see if I can make this a little larger. Okay, hopefully everybody can see this. Now, these were all live trades that were generated via Holly today. Now you can see how many shares of each thing he was in, and you might be going, why is everything in 136 shares and then 134 and 135? Well, that's because he was using the the risk of a certain amount per stop loss. Now, this is already available in the product if you'd like to start playing around with it. So when I go to options, you'll notice the AI trade size. So Dan was working today with I believe it was a $34 risk per trade. In other words, it will auto size you into the proper amount so that if the stop does occur, you would only lose $34, right? Now, if we look right here, at this time that the screenshot was taken, closed was down 37. So only one thing had been stopped out, and of course, overshot by $3 there. But you set them approximately $34 by the time it gets you out on a market stop. You might lose 34, you might lose 37, you might lose a little over 40. It all depends on the stock and how spready it was and liquidity and all that good stuff. But what you're seeing right here, ladies and gentlemen, was full on all Holly autos. All of these signals were from the signals that we were just looking at. I've perused slippage, looks like slippage is coming in anywhere between, on average for this batch of trades, 3 to 5 cents, which is pretty good, as far as being not co-located at the exchanges and whatnot. So here you have a blotter of over 30 trades, a long hedge fund basically generated on a daily basis to the bias of the market, but you're diversified among 30 some odd things, right? So think about that. When you're really wanting to play the numbers, this is pretty much the way you would go about it. Now, don't get me wrong. I know that everybody out there that's waiting to use Holly Automation, maybe you don't have the account size to take everything. But keep in mind as you move forward, this is a statistical system. And what you're seeing today are those statistics work out in beautiful format. Everything was working. We had good expectations. Dan decided based on that, hey, I'm going to go risk on. I'm going to manage my, in other words, we're changing the game up here, because when you're in a blotter of this size, most people are fixating on, oh, I got to make sure I take my profits, or I've got to make sure I do this. When in reality, when the things are working, maybe it just makes sense to keep our losers at the top and just make sure that something doesn't get away from us. Maybe that's a better way to do it when you have a blotter like this. Well, we're going to keep you apprised as we move forward and, continue to share the data as we produce it. But all in all, a great performance when you consider the fact that each and every one of these trades was only risking $34. So just wanted to give everybody a peek into the lab that was Trade Ideas and Dan executing in risk on mode today with all Holly automation. So more to come on that as we proceed ourselves. And of course, most of today's good stuff was from Holly, but I do want to take a moment to point out how a lot of things were very similar today in some of the bread and butter tickers that I like to always showcase. Now, the turbo up and down with no resistance and no support, pretty dead. Barely spit out hardly any trades today, and a lot of the ones coming through the no resistance ticker today were real thin and just not doing anything. Even the turbo down no support basically spit out one that I'll call an honorable mention today because the timing wasn't there. But this is definitely one that you might want to keep your eyes on moving forward in case the market does get soft. This little guy's at all-time lows. It did have a nice range breakdown today, but my ticker didn't pick it up till a little bit later than I like to see them, because ideally on a pattern like this, we want to get it as soon as the break occurs. This is a little chasey. Now you can see here today, it still worked, but chasing is not something that I recommend to the up or the downside because it will get you in the end. But it just didn't have the volume it needed coming through here. So even though I didn't trade this one today, it's definitely going to be on my radar, because if it sets up again tomorrow and the timing is in play, well, there's nothing really to catch its fall, so to speak. It's into the abyss, into the hole, as we could say. So if we do get a nice snuggly setup tomorrow, that one might be worth taking a look at. Now, due to where we are in the market, just not a whole lot of things hitting all-time highs and not a whole lot of things hitting all-time lows, but one here, one there. On my regular turbo ups and downs, if you waited about an hour, which is typically what I like to do, because you have to give 4 15-minute bars time to develop and to even see if anything is there, we did get quite a few. Right. Now I'm just going to show a few here: Netflix, Mohawk, Team, DLTR. And what you're going to notice is they're all going to look pretty much the same, right? So let's just look at Netflix here. And once again, what are we doing with these things? We're looking for the range breaks, keeping in mind that these are 15-minute candles. So we got a nice Netflix signal right here. And what do we have? We had a nice little move up. Now, if this is the entry candle right here, and this is the prior 15-minute candle, this is typically what we would use as a stop loss. Now, if this was the max that we had, and we called this reward up here, notice my risk area, my reward area on this one today. It's just a hair. It's not very much bigger than the risk area. Right? But it was a good trade, and it worked nonetheless. Just not a whole lot of risk to reward there. Now we're going to look at Team. gee, almost looks exactly the same as this guy, right? Getting back to the funny comment that myself and Dan make all the time about it seems to be just one algo running the show here. And once again, on team, we get a breakout. Smash that down because we have to use the wick there. Once again, look at my risk area. Look at my reward area. Now, this makes perfect sense in retrospect, but it also, as you pick up on it during the trading session, you're noticing that, not getting more than a 1-to-1 on these things today. Okay. Kind of coincides with what we saw the market do. Had a 55% compare count reading, which is right on the cusp, nothing to write home about, right? So makes a lot of sense here. There wasn't a whole lot of potential for follow through in general, and we're seeing that play out in these trades, which typically we'll see a lot juicier reward area versus the risk area. So that was Team, Netflix, Mohawk's going to look, you guessed it, pretty much the same as everything else. Oh, and by the way, not only was everything pretty much exhibiting the same chart pattern, but look at these trades as well. Just riding that 10 period until they don't, right? So what do we have? Mohawk, Netflix, Team, DLTR. Here we go again. Same thing, risk area, reward area. So once again, more of the same, right? And I could go on, I could probably pull out dozens more of these. But once again, this activity was not a big surprise based on what my expectations were geared up for today, which was some upside push, but, not anything huge except for Holly. Now, let's backtrack. If most of the range breaks that I look for, we're not getting more than a 1-for-1, and then we see Holly bust out with these crazy percentage values here, well then, ladies and gentlemen, we're watching the right data, right? Because Holly outperformed these guys several times over on several different plays here. So if the market's spitting out mediocre gains to the upside, like a 1-to-1 risk to reward ratio, that's fine. It was the nature of the day. But then we had Holly spitting out plays that did a lot better than that. So we're on the right track here, right? We've got everything that we need here to make good decisions and develop reasonable expectations for any given trading day. So I hope that makes sense there. Looks like we're caught up on questions. Make sure I didn't miss anything here. Oh yeah, let's talk about Mogu real quick here, because it was the one short that I did see come across that had some pretty good timing here. And also looks like one of the setups for my section right out of the ebook that myself, Sean, Andy, and Steve put out. Oh, can't remember exactly when, but it was long before the market took its little 15-20% tumble here. And, here we have an up day, but there's always a stock setting up to the downside. And today, from my little repertoire here, it was Mogu as it punched this low right here, doing decent volume, average volume, finished the day at 1.07, but nice little entry here on the short side. We got a risk up here. This is the only one where the reward area was a lot juicier than the risk area today. And that was a downside play today, totally isolated, but it's the beauty of the pattern and the risk versus the reward that really paints the picture here. All right, Steve, I do believe that's all I got for today.
All right.
Unless you have anything to add. Otherwise, Scott, if you'd like to walk us out, tell everybody how they can save a little bit of do-re-mi, either upgrading or new subscribers.
Yeah, right on. So a couple things. First, we do have an ebook. Released it last year about this time, and it was very prescient because it, we've had a crazy market since we released it, and it's still very relevant. So if you don't have a copy yet, get yours free, trade-ideas.com/ebook. Just plug in your email address and get the download link. It's got 5 strategies that you can keep in your toolbox to win in a post-BTFD world. We've got a podcast, and the newest episode of the year will come out on Friday. So get ready for that by searching for Trade Ideas Podcast in whatever app you use to collect and listen to your podcasts in. You can listen to some of the back issues. We had a special guest podcast as the very last one of last year after our season-ending podcast. So you can check that out in the meantime. We've got a discount code for new subscribers and for those of you that want to upgrade. Just use the code NEWOFFICE, all caps. Save 15% off your first month or year of Trade Ideas or the first month or year of your upgrade, and you can use that all month long. So just go ahead and get started with that. It's good for all the subscriptions, either standard or premium, yearly, monthly. So take note of that, new office. Any questions, email us, info@trade-ideas.com is the best place to send all your questions. You can follow Steve on Twitter @TodayTrader and Jamie Hodges @QuantBot. Facebook.com/TradeIdeasPro is our Facebook page that you can like to get updates and share those updates with your friends. Thanks, everyone. Thank you, Steve and Jamie. Welcome back to the new year.
Yes, indeed. Thanks, everybody, for attending. Thank you, Scott. Thank you, Steve. And Steve, I guess we'll be seeing you tomorrow for the Trade of the Week.
I'll be here.
Yeah, and we'll have a recording up later on tonight or tomorrow morning of this one, and you'll get an email update from GoToWebinar with a reminder of how to find it. Thanks, everyone.
Sounds good. See you tomorrow. Bye-bye.